Good day and welcome to the Star Group Fiscal 2026 First Quarter Results Conference Call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then 1 on your telephone keypad. To withdraw your question, please press star then 2. Please note this event is being recorded. I would now like to turn the conference over to Chris Whitty, Investor Relations Advisor. Please go ahead.
Thank you and good morning. With me on the call today are Jeff Woosnam, President and Chief Executive Officer, and Rich Ambury, Chief Financial Officer. I would now like to provide a brief safe harbor statement. This conference call may include forward-looking statements that represent the company's expectations and beliefs concerning future events that involve risks and uncertainties and may cause the company's actual performance to be materially different from the performance indicated or implied by such statements. All statements other than statements of historical facts included in this conference call are forward-looking statements. Although the company believes that the expectations reflected in such forward-looking statements are reasonable, it can give no assurance that such expectations will prove to have been correct. Important factors that could cause actual results to differ materially from the company's expectations are disclosed in this conference call, the company's annual report on Form 10-K for the fiscal year ended September 30th, 2025, and the company's other filings with the SEC. All subsequent written and oral forward-looking statements attributable to the company or persons acting on its behalf are expressly qualified in their entirety by the cautionary statements. Unless otherwise required by law, the company undertakes no obligation to publicly update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise, after the date of this conference call. I'd now like to turn the call over to Jeff Woosnam. Jeff?
Thanks, Chris, and good morning, everyone. Thank you for joining us to discuss our first quarter results. Fiscal 2026 has started off very well as our performance benefited from recent acquisitions, physical supply, and per-gallon margin management, the continued focus on service and installation profitability, and last but not least, temperatures that were almost 19% colder than last year and 6% colder than normal. The confluences of these factors, even given the operational challenges associated with persistent cold temperatures, resulted in an increase of adjusted EBITDA of $16.5 million, or 32% year over year, net of a $5 million charge to our weather hedge program. At the same time, net customer attrition was modest during the period. Improving efficiency and operational execution have been specific areas of focus for us, so it's quite rewarding to see our work have a meaningful impact on bottom-line results. The cold weather has continued thus far into the second quarter, and in fact, January finished 2% colder than last year and 9% colder than normal. I'm very proud of the way our employees have responded to the added demand and the challenges of making deliveries in snow and ice conditions. They have worked tirelessly at times through difficult conditions to provide our customers with the level of service and responsiveness they have come to expect. While we did not close on any acquisitions in the first quarter, we did complete one purchase of a small heating oil business just a few days ago. It's not at all unusual to experience a slight lull in prospect activity during a busy heating season, but we still have several opportunities under various stages of review, and I anticipate that we will see new ones presented as we get closer to spring. Although it's too early to say how fiscal 2026 will play out, we remain vigilant in providing excellent customer service, keeping costs down, and growing our service and installation profitability. I believe we are well prepared to address whatever challenges or opportunities might present themselves over the remainder of the heating season. With that, I'll turn the call over to Rich to provide additional comments on the quarter's financial results. Rich?
Thanks, Jeff, and good morning, everyone. For the quarter, our home heating oil and propane volume rose by 11.5 million gallons, or 14%, to approximately 94 million gallons, as the additional volume provided from acquisitions and colder temperatures was reduced by net customer attrition and other factors. Temperatures in our geographic areas operations for the 3 months ending December 31st, 2025, were 19% colder than the 3 months ending December 31st, 2024, and 6% colder than normal. Our product gross profit increased by $29 million, or 19%, to approximately 179 million gallons due to an increase in home heating oil and propane volume sold and higher per gallon margins. We realized a combined gross profit from service and installations of $5.6 million for the 3 months ending December 31st, 2025, compared to gross profit of $6.9 million for the 3 months ending December 31st, 2024. While installation gross profit increased by $1.4 million, the service gross profit loss did increase by $2.7 million due to the high demand for service relating to the 19% colder temperatures and the additional costs attributable to an increase in our propane tank sets. Delivery, branch, and G&A expenses rose by $11 million in the first quarter of fiscal 2026 versus the prior year period. The company's weather hedge contracts accounted for $5 million of the increase, as temperatures experienced from November through December of 2025 were colder than the contract's strike price. In addition, delivery expenses rose by $3.8 million, or 13%, largely due to the 14% increase in home heating oil and propane volume sold. The remaining operating costs increased by just $2.2 million, or approximately 2%. During the first quarter of fiscal 2026, we recorded a $5 million non-cash charge related to the change in the fair value of our derivative instruments. By comparison, in the first quarter of fiscal 2025, we recorded a $5 million credit. Net income increased by $3 million in the quarter to $36 million, as an increase in adjusted EBITDA of $16.5 million was reduced by the unfavorable non-cash change in the fair value of derivative instruments, as I just mentioned, was $10 million year over year. In addition, net income was also negatively impacted by higher depreciation and amortization expenses and net interest expense due solely to our higher acquisition program, and that totaled $1.7 million in aggregate, along with higher income tax expense of $1.3 million. Adjusted EBITDA increased by $16.5 million to $68 million, primarily due to a $16.8 million increase in adjusted EBITDA in the base business and a $4.8 million increase in adjusted EBITDA from recent acquisitions, which was partially offset by the $5 million increase in expense relating to the company's weather hedge contracts. And with that, I'll turn the call back over to Jeff.
Thanks, Rich. At this time, we're pleased to address any questions you may have. Operator, please open the phone lines for questions.
Thank you. To ask a question, you may press star then one on your telephone keypad. If you're using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star then two. Once again, if you have a question, please press star then one. The first question comes from Tim Mullen with Laurenholt Management.
Hey guys, just wondering if you had any commentary, given we're now a little over a month into the second quarter for the fiscal year, given obviously this cold weather's persisted, in terms of how it's going operationally or any other kind of general commentary you can provide. Thanks.
Sure, Tim. Yeah, I mean, obviously, January was colder than normal. February is starting off that way, and we've got a pretty strong forecast in front of us. And we've been dealing with, with some storms. So conditions have definitely been a challenge for us, but, frankly, this is what we're built for as a full service provider, and this is what we planned for. So, I'm just always amazed at how our employees really just step up and get a lot of satisfaction out of taking care of our customers. So, I feel very good about our current position right now, given some very difficult conditions.
Great. Thanks. Congrats on a good quarter.
Sure.
Once again, if you have a question, please press star, then one. At this point, there are nobody in the queue, so I'll turn it back to Jeff Woosnam for any closing remarks. Please go ahead.
Well, thank you for taking the time to join us today and your ongoing interest in Star Group. We look forward to sharing our 2026 fiscal second quarter results in May. Thanks, everybody.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.